It's a community which was being started with just a concept to help the community at 5 a.m. And beautifully, the journey is more than 500, could be 500 days in October. And hats off to the founders, that is Faisal and Yash and the core team. So thank you so much, Brainciti, for bringing this platform, bringing everybody together for this transformation and creating so much of knowledge and learning on this platform, bringing everybody here. So here we have our host, who is such a dynamic person, who is, is an author. He is a crypto advisor. Yes, he is amazing with blockchain technology, which is very upcoming with banking. So we have blockchain with him. He's a crypto advisor. He's a former head for a committee for AIMEI in India. And he's an author. He's an entrepreneur. He's a profiling angel investor, former CEO of ZepPay, former CEO of the business incubator at IIT Mumbai, and former advisor to Kalkari Capital. So I think he is so rich with all CEOs. Amazing, Ajeet. Like, it's feeling the energy and the the spirit is going very high when I'm taking an introduction all through. He is presently a venture partner and mentor with several international venture capital firms, and he spends a lot of time in creating awareness about digital assets and advising top token issuers. So he's a person who is, so rich with technology, so rich with financial exposure and experience. So all to you, Ajeet. Thank you so much for accepting our invitation to come to Brainciti platform. And thank you everyone who's present today with us to be a part of this amazing session with Ajeet. So over to you, Ajeet.
Hey, thank you very much. Actually, it's my pleasure and honor to have accepted your invitation. I had not heard of Brainciti till I talked to you, Nidhi. And hence, obviously, did not know what to expect, but having heard the introduction, having, learned more from you, very happy to be here. So today we will talk about cryptocurrency. So this is more like a beginner's session. Some people refer to it as an idiot's guide, but I definitely never want to call my listener an idiot, right? Otherwise, what does that make me? All the same, I'm going to talk for somewhere between 15 to 25 minutes. And then I would actually like to open the floor up for questions so that, I don't come with like memorized scripts or pitch decks, etc. All the same, let's cover a very wide range of introductory topics on Bitcoin or cryptocurrency. So initially, what I will do is when I say Bitcoin or I say cryptocurrency, I mean one and the same thing. Of course, anybody who has knowledge knows that cryptocurrencies are of many types, only one of which is Bitcoin. But let's try to begin with like the complete zero level basics, as in what is Bitcoin? What happens is that when you look at protocols, let me just, without getting technical, explain that to you. Suppose, for instance, we talk about email as a concept. Suppose we talk about internet access as a concept. Who owns that concept? As in, who owns email? While you may say that I use Gmail or Yahoo or any of the others, see, they are built on top of a protocol called email. Likewise, if you look at internet access, it is not your Airtel or Vodafone or Reliance Jio or any of those who have created the internet. They are giving you access points to it. What I'm trying to get to is that the biggest innovations and inventions in the world actually either belong to no one or they belong to a very small set of people who then repackage it, relicense and give it to the rest of the world. One huge difference is in the case of blockchain-based technologies, Bitcoin being the very first, and then there are many. Some of you may have heard of names such as Ethereum, Cardano, Ripple, Polygon, Matic, a bunch of those. What has happened here is that these are technologies pretty much like, I would say, electricity or the internet or derivative technologies such as the email. However, there are people who have set it up as opposed to them arising over decades in a US research lab or something along those lines. And as a result of the fact that the path that these technologies took was, instead of going to a few big giants, instead of a Reliance or a Vodafone or an Airtel becoming the supplier of internet, or Gmail or Yahoo or some other such email provider being the provider of email, the way this new protocol called blockchain has been brought about is that it has got democratized, which means literally all of us can own it. Please note, I'm not yet talking about the cryptocurrency end. I'm talking of the technology called blockchain. Don't want to get too much in the technicals of it, but a blockchain is a way of storing records. So loosely you could call it a database. Now, if everybody owns it, which is almost saying that nobody owns it, if you think about it, if everybody owns it, who pays for it? Because one of the clearest thing about ownership is that the person who owns pays for it. So for example, if you have Reliance or Airtel or Vodafone kind of internet access, then you know they have probably set up the wires, or they have set up antennae, or they have set up the systems to access it. When you have to access blockchain as a technology, everybody who participates in the blockchain network provides assets, resources or investments of their own, which means it is owned by the masses, and the resources being used are resources of the masses. And if that is the case, why are people doing it? What is their economic incentive? Long term, see, for short term, we may all do voluntary activity, but if we are having to contribute a lot of resources, what we need some economic incentive to get large number of people involved in it for the long term. The interesting thing is that so that people do such a contribution, this network, which is called some blockchain name, such as the Bitcoin blockchain or the Ethereum blockchain or the Dogecoin blockchain, or there are various types of blockchains. What these blockchains do, or these computer networks do, is that they issue certain tokens. We could loosely or oversimplistically call these tokens of appreciation to people who contribute to the network. These may be given to all people who contribute, or usually on a lottery system to some of the people that contribute. Now, that is all there is to the token or the coin. Because people value the underlying network, they are assigning a market value to these tokens. So for example, if everybody said that Bitcoin has no value, Bitcoin would have no value, which by the way is not very different from saying that if everybody said US dollar has no value, it would have no value. In reality, unlike asset-backed securities or notes or coupons or vouchers, like for example, currency notes used to be till about 1970, when each country could print only as many currency notes as there was gold in that country. But that is a system which has gone for more than 50 years now. In light of that, everything that we call money is actually based on our belief. It is based on our belief of what that value should be. Likewise, when these tokens, and Bitcoin is the most famous, when these tokens are granted to people who participate in the Bitcoin network, the rest of the people on the Bitcoin network are granting this or putting some value to this. And that is what is the reason for there being so much price. Now we can have a debate. In fact, one of the first questions has already come on the chat of this session that we are doing around whether the price would correct, or whether the price is too low, or whether the price is too high or just right, or how do we find the price, etc. I will cover that towards the second half of my conversation, because for better or worse, whenever we tend to think of cryptocurrency or Bitcoin, usually the first thing that we think about is its price. There are few of us who think about the underlying technology or the apps that can be built on it, but the majority of people tend to think about its price almost exclusively, or at least for the first instance. Now, if this is what Bitcoin is, and what I'll do is I'll move to the second part of what I'm talking about. Even if you have not understood the second part, the way I have modularized my talk is that there will be something in it for everybody. So some people say that Bitcoin is the future of money. Is it the future of money? Well, it could be. It has some beautiful characteristics that make it suitable for money. One of them is that it is global in nature. Second is that it is purely digital in nature, unlike, let's say, the US dollar or the euro or the British pound or the Indian rupee, where there is physical notes also, there are coins also, and there are a variety of digital structures, right from payment wallets to internet banking, etc. This is a unified structure and a purely digital structure. Third is that, when you look at even banks in different countries, in some countries, banks are regarded as, oh my God, banks cannot fail, although frankly, they have failed all over the world, on and off. In some other countries, people don't trust their banks. Now, what happens here in Bitcoin is that Bitcoin, as well as most other cryptocurrencies, have created a system where it is not a matter of whether you can trust them, right? Otherwise, frankly, since there is no central authority, since there is no government, since there is no large corporation who you can go to and say, hey, listen, I want my Bitcoin back, or I want to understand Bitcoin more, frankly, people would have potentially no trust in it. But what Bitcoin has done is that it's created a system wherein the element of trust is removed. So it is not as if you trust Bitcoin or don't trust Bitcoin. There is no need to trust or mistrust it. So that is the third element. The fact that it is global, the fact that it is digital, the fact that it is a trustless system. Please, not trustless doesn't mean you don't trust it, but that the element of trust doesn't arise. And then there are the whole host of other advantages, especially subsequent to other forms of cryptocurrencies like Ethereum, and then there is a whole host of them. Today, the number of cryptocurrencies that have some level of activity is actually crossed 12,000. Right? While that sounds like a large number, if you compare it to the number of companies that are listed on stock exchanges around the world, it is still a very small number. So now that there are many other tokens, many other crypto coins, there have been new coins which do specific functions. There are coins which help speed up the blockchain. There are coins that act like banks. There are coins that help you place bets. There are coins that help you earn interest. There are coins that represent games. There are coins that, so there are so many types of coins. To that extent, it actually starts sounding, and I would say that's unfortunate, but it starts sounding pretty much like you have so many companies which do so many commercial activities. Now you have so many blockchains that do so many commercial activities. So let me go to make this a completely well-rounded and balanced discussion. Like I've started giving you some advantages or reasons to like Bitcoin and cryptocurrencies. There are some reasons that scare people away from Bitcoin. Number one is the price volatility of it. The fact that the price goes up and down so much is that at all points of time, if you have not bought Bitcoin, you feel, you know what, it crashes so often, I'll wait for a crash. And if you have already bought Bitcoin, you're like either thinking, oh my God, it's going to go 10x from here, so I will not sell. Or if the price starts, getting a little shaky and confidence is lost, you panic and say, my God, is it really going down to zero as some people predicted? And you start panic selling. So the usual dictum of financial investment, namely buy low, sell high, a lot of new time investors end up accidentally, unwittingly, and undesirably doing a buy high, sell low. And the logic of that is that today, unlike, if I'm not mistaken, any other asset class, the total number of new people who have entered the world of cryptocurrency in the last 12 to 24 months exceeds the number of all the people, let's say, so last 24 months versus all the period before 24 months, the total number of people who have done crypto for the first time, invested in it for the first time, are more in the past 24 months than in the period before. Now, these people have sometimes not seen a bear market, or at least a ruthless bear market. Some of them have come in with anyway some hesitation and they're trying it out. These are the people who potentially keep waiting for the price to fall and then end up buying it at a very high price. And as a result, when price starts losing some ground or some confidence, these are also the first people to sell it. So the presence of new people in the crypto market causes the price movement to be quite sharp. I envisage a time not very far from today. Surely we should be there in the next 5 years, maybe in the next 2-3 years also. This rule that I gave you, that the people who have entered crypto in the last 2 years exceed the number of people who entered crypto in all the time before that. If that starts changing and the people who have been around for long are far greater than the people who have been around for a short period, as is the case with all other markets, whether it's real estate, mutual funds, bullion, gold, stock markets, etc., when new people account for a very small proportion at any given point of time, I think that there's a chance
Ajeet,
that prices
means,
might be more stable.
Like our other shares, it's like when the graph is going up, so whoever has started first will gain the most.
Well, that is right, Nidhi. But the interesting aspect there, Nidhi, is that, whether you started first and the price was going up will be known only in hindsight. Because today, let us say the price is 100. Now, you do not know whether this represents the beginning of a climb up or whether this represents the beginning of a climb down. That will be known in hindsight. And as a result, what tends to happen is that in hindsight, like, I always say that in the financial markets, there are a lot of astrologers who very successfully predict the past. Astrologers are supposed to predict the future, but I notice a lot of these gurus who will come and explain why price moved up or down after it has moved up or down. So that takes me to the third part of the conversation, which is, where is all this going? Well, with a little bit of disclaimer or qualification that regulatory aspects, such as some governments taking a very negative view of it, and regardless of whether it's good for you, bad for you, whether it's democratic in nature, or whatever other stories supporters of Bitcoin might want to give, if some governments take a very adverse view of it, at least people in the country where the government has taken an adverse view will find it quite tough to participate, and most people will choose not to, because nobody wants to fight with their government and face the consequences. As a result, barring that one potential problem, which by the way I think is getting better and better as with every passing year, at least for the last 5 years where I have been a market participant, I think that if we are looking at application of Bitcoin, like for instance, 5 years ago when I was interviewed by CNBC for the first time on cryptocurrency, other than asking me questions such as what is the underlying value, is it just like a hype or a Ponzi scheme or any of those things, one very interesting thing was that at that point of time when people used to use Facebook, people used to play games on Facebook. Like there used to be a very famous game called Farmville, where you would grow a farm and then you do agriculture and then you'd have some gold coins, etc. So the other panelist who was with me on CNBC, he told the host that, you know what, Bitcoin is nonsense. It is not very different from that game Farmville that we play on Facebook. Even in Farmville, there are gold coins. Bitcoin is just like that, except that we have taken it very seriously. So luckily, today when I am on a similar television channel, including the same one, I find that those are not the questions that are asked of me. The questions are far more evolved. In fact, I have been asked very technical questions also on TV now, which pleases me. But where is all this going? I think that going forward, a lot of applications have already started getting built on it. For instance, in January of 2020, the total amount of money deposited into decentralized finance. What is decentralized finance? For now, whatever was the traditional world of finance, such as funds and banks and borrowers and lenders and depository participants and custodians, all of the world of finance, when done on the blockchain without a central owner, you could loosely call that decentralized finance. Why I am saying for now is because I visualize this only as a starting point, and soon when more people adopt it, probably we will see the evolution of new financial systems and products that did not exist earlier. But having said that, I feel that today, if you go back to January of 2020, which is what, roughly 1.5 years ago, maybe a little more than that, the total amount of value that was locked in cryptocurrency based decentralized finance was only $1 billion. Now, $1 billion sounds like a big number, but the fact is at the global level, for a bank-like system to have a total of $1 billion was a joke. But come April of 2021, which is 16 months after that January number I gave you, this number had almost reached 100 billion. So that means it had grown something like 90 to 100 times in a 16-month period. Now, there are very few industries that have grown by that scale. Of course,
that this means whoever has invested first, the risk appetite of them must be good.
Absolutely. In fact, take my example. By January of 2020, I had been in the crypto market for 3.5 years already. Even then, I did not fully appreciate the value of DeFi because I said, it's just the beginning. Who knows whether it will be accepted or not? And as a result, I myself waited till August of 2020, which is like about half a year, before I got convinced that, this is not a trickle. This is a flood and hopefully someday a tsunami. So yes, people who took the earlier risk, which was by the way a phenomenal risk because it may never have taken off. It may have moved in the opposite direction. They ended up getting the reward. In fact, let me move to the fourth part of my talk. And after the fifth, I will open it up completely to questions. So I'm trying to cover a lot of ground. The fourth part is, how do you view cryptocurrency as an investment opportunity? Well, at a very high level, cryptocurrency investment is not different from any other investment. So whether you are going to open a certificate of deposit in a bank, which probably gives you very, very low rate of return, but gives you a very high level of security that you'll get your principal and interest back. Or you go to like invested in debt-based mutual funds or stocks or direct investments into stocks or startups equity or cryptocurrency. Ultimately, all investment is about being able to assess and quantify the risk that you are taking and being
Did we lost him? Okay.
Yes, no sound.
Yeah, no sound. No sound.
The screen has also got on hold. Ajeet, are you there?
I think there is a Wi-Fi bandwidth issue, I guess.
Nidhi, should we stay put or should we log out?
No, just just wait for 5 minutes. I think Nidhi is connecting the speaker. He has
Okay.
some.
He's joining back. Just 2 minutes, please. He's joining back. There's some problem with the laptop and internet over there. He's joining back from home.
Sorry for the inconvenience. Sorry, let's. Yeah, he's joining back. He's here.
It's okay. It happens. Not a problem.
Yeah, thanks, Ajeet. So welcome back, Ajeet, with us, with all powerful session. You all are
Hey,
waiting.
am I part of the session already or am I not yet here?
You are very much on live and on
Am I being
spotlight.
heard? Somebody could give me a thumbs up or say something.
Yes.
Nidhi, am I
Yes.
in the
Yes.
call?
Yeah,
Yes.
very much. We can hear
Yeah,
you.
very clear.
You're good to go, Ajeet. We're waiting for your wisdom to flow. You're good to go.
Okay, here I am. Perfect, thank you. So what I was telling you is that my experience in the crypto market has been, and this probably is true about other markets also, but in crypto market, much more so, I have noticed that sometimes people are very risk averse and say, I don't understand all this. Suddenly people start talking of wallet, custody, blockchain. I'm not an engineer. I don't know how all this works. So I'm going to stay away from it. I have heard it's going to get banned. I don't know how the government will view it. I don't know what's going to happen to tax. So they are looking a lot at the risk end of it. And by the way, they're right in their assessment, but they completely ignore the reward side of it. And then there are those who only look at the reward and say, oh, you know what? In 2011, it was like $1 or even less. And now it has become like $45,000. And just imagine if that happens again. So they are only looking at the reward side of it. And this is what is causing the problem. I think that a fair assessment requires both a discussion on the risk as well as the reward. Let me move to the fifth and final part of this. Where are we in the world of crypto and where are we going? There is an entire, so crypto, by the way, is not crypto. That's like saying stock market. What does stock market mean? There are various sorts of companies, right? There are banks, there are real estate companies, there are consumer good companies. So let us go one layer deeper into crypto. What is happening in the world of crypto is that already decentralized finance is become very, very popular because currently the offerings in the decentralized finance space are the same that are being available in banks and other financial institutions, but on the blockchain. Now, different countries have a different position that they are in the evolution of financial services. For example, if you consider a country like India, India is fabulous when it comes to payment. So we have all of these facilities, most notably the UPI, which allows people to transmit as little as 1 rupee almost instantly and almost seamlessly. So Indians are not specifically impressed by the micro payment or the peer-to-peer payment capability of the blockchain. While somebody in the Philippines might be somewhat more impressed because there is still a lot of prevalence of cash, that is currency notes, and maybe some places in Africa also they would be impressed by this. But the truly global nature of cryptocurrency is very pleasing to Indians because we live in a country where the capital control norms and the laws of the country make it relatively difficult for cross-border transactions. Small amounts or in specific categories, they are easy. But if you really are running a business which requires a lot of cross-border, you may find it a very big pain to deal with the capital control norms of India, while another country like Hong Kong or Singapore may not similarly appreciate that. So what is happening is, in different pockets of the world, cryptocurrency is evolving in a different way as far as decentralized finance is concerned. As far as other forms of businesses are concerned, there is this whole emerging area of non-fungible tokens. While today, NFTs or non-fungible tokens are relatively restricted to art, collectibles, and the like, going forward, when we are going to tokenize everything from assets to specialist assets like real estate, commodity, bullion, etc., and that allows a free, peerless system of system of transmitting, buying, selling these assets or communicating their ownership comes about and is also accepted by the regulator, I think that a whole host of new opportunities will arise. I believe that even some simple things like Uber or Ola or Careem or whatever are the taxi hailing apps, or Amazon or Flipkart or eBay or whatever are the e-commerce apps, or a whole host of digital banking services which have now completely moved to technology and are no longer places where you have to physically go or make phone calls or send emails to. I think all of these should get decentralized, because why should there be centralized organizations which are sucking away the profit? The profit should remain among the people and should be moving from people who are consuming the service to people who are providing the service. If my belief about the future being decentralized turns out to be true, then the future for cryptocurrency is bright, which doesn't mean every cryptocurrency will do well, but several cryptocurrencies will. And if at the same time, this is, as some people would want to believe, a flash in the pan, as cloud computing once was, as client server was, and actually became, as artificial intelligence was when I was a student in the 80s and 90s, then it would head the other way. With that, with those final words in my fifth part of the conversation, I invite Nidhi back on stage. Nidhi, I like to keep a lot of time available on the floor for questions, so that is the part which is customized for your audience. So if whichever method you use to bring about questions, if we can begin that stage, I think that would be very interesting for the audience.
Perfect. So thank you so much for bringing so much of light and highlighting so much of things in terms of functioning government regulations and everything. So we would be taking up the questions and answers. So guys, you can keep your questions ready. Till then, I have one question from Mr. Rajesh in the chat box. He says, hello, Ajeet. What are the key challenges with central banks not accepting virtual currency?
So, two things. First, I'll give you a direct answer, but with the qualification that it is not all central banks around the world. But you are right that the biggest problem faced within the regulatory framework of any country seems to be by the central bank. And that is because Bitcoin, which was the first cryptocurrency, and then many other cryptocurrencies that follow, they use the word currency in their name. Bitcoin, cryptocurrency. And the central bank in all territories, maybe along with some department or some functioning ministry or whatever, is given the task of running the money in the system, the monetary policy in the system. While there is no country barring one, El Salvador, where cryptocurrency has become so popular that it starts looking like money within the system. It is largely a very limited activity compared to the size of any economy. But the fact is, if this starts becoming bigger and bigger, and soon starts challenging, or as the central banker might feel, undermining
We again lost him. All you guys can hear me?